Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is October 6th and this is a weekly markets update. Let's have a look at the news of week 40 and see what are the next trends. The main news is announcement of the fresh Indian tender that happened last week. I was expecting it a bit later, somewhere in first decade of October, but Indian government decided to be quick, taking into account very good monsoon and stocks that are still relatively low. After hiccups with imports in the first half of this year, perhaps the government wants to play very safe. RCF is seeking for 2 million tons for both coasts with shipment before December 10. If the targeted volume is booked, and it will happen because many producers will be happy to offer tons, then this year will mark a record purchase of India via tenders and in general record imports since 2022. Only in tenders, India will purchase 9.2 million tons, including this last tender. And total imports will be over 10 million tons. Potential Chinese supply, which is still unconfirmed, is the key factor making suppliers across the globe nervous and cautious in terms of relying on India. Production rates are robust, domestic demand still sluggish, and remaining quota very limited, between 2 to 300,000 tons. So, quota's extension in terms of both time and volume will be needed in order to Chinese product participate in the tender. Let's see how Chinese authorities will move after the holidays that will end mid-October. Tender announcement, as usually, spurred a round of activity in Northern Africa. However, push for prices was not really supported in other regions due to ample supply. Egyptian producers conducted sales at price that reached maximum at $445 FOB. Sorfert sold 15,000 tons lot at $448 FOB. However, European demand remains subdued because of bad farm economics mainly. The buyers are cautious to step in too early. They wait for lower prices in Q1, they expected by the market. Nigerian Dangote closed another tender for 30,000 tons for end October shipment in Friday. The results will be known this week. Price in the Middle East hasn't increased and even has slipped a bit. However, it was before tender announcement. One of the factors was that Ethiopian EBC purchase tender for almost 500,000 tons was scrapped without notice about retendering. Regional suppliers were counting on these tons, so now they will need to find other home for those. Last week, Armenian product was sold in the range between mid-380s to high 390s FOB, several lots. In Iran, despite official FOB level remained at $370, actual sales were conducted in the range low to mid-360s, and demand remained not higher than this level. Other than that, spot activity was absent. In Southeast Asia, there were only several sales conducted in the range of mid-380s to mid-90s FOB, but the activity was also limited. US market is in the off-season mode, while demand in Canada continues and some fresh inquiries are circulating for October and November shipments. In Brazil, the market also responded to the Indian tender news and CFR level increased to $430 plus. However, the demand for urea during purchasing season that is approaching quickly is still a question mark in the light of incredible supplies of AMSUL conducted until now. Farmers are still struggling with financial issues and ports are full of products that are not taken inside the country. So, let's see how demand will pick up later in Q4. Ammonium sulfate price slightly increased, mainly on the back of inquiries from Brazil, despite Chinese holidays week. Chinese producer SCC concluded a sales tender for copper product at low $140s FOB level, which is $4 higher compared to a week ago. However, in general, sulfate market globally remained subdued. Some inquiries start to emerge for supply to Europe and Turkey for later in Q4, but still no firm business. Nitrates demand is almost non-existing as well. Western European buyers are waiting for prices to ease, while Eastern European buyers are mostly covered with their purchases from Q1. Only Ukrainian demand is still uncovered, but this is a problem of logistics, as seaborne imports are banned. In Brazil, there is no demand. The big topic of conversation in Europe these days is, of course, CBAM, and as deadline looms nearer, importers are busy trying to bring in as much nitrates as possible ahead of its rollout. For example, around 10,000 tons of Russian CIN was sold into Europe, while 5 vessels of Turkish CIN are also destined for Europe in October. In the ammonia market, trend is still bullish, both sides of Suez. However, spot business was subdued last week. The key news of last week was US Tampa price settlement at $590 CFR, which is $50 up versus September level. This year, price swings from month to month are quite extreme, I would say. There were no fresh spot deals conducted in any region last week, but discussions for further business reflect this surge in Tampa price, of course. In India, demand remains strong and prices are supported by regional supply limitations. Fresh spot level discussed is between $425 to $40 CFR. In phosphate segment, the bearish mood continued last week. India bought Chinese cargo at $778 CFR for October arrival, which is almost $15 below last deals. But now, main attention in India is focused at new subsidy level for Rabi season through March 31 next year. That is expected to be issued this week. Current level of phosphoric acid price puts domestic production at minimum of $150 loss, while production with phosphate rock, which is usually profitable, indicates just minimum profit of $10 to $15 for the producers. At the same time, straight DAP imports reflect $250 loss, so Indian government is expected to prolong the subsidy most likely at the current level for Rabi. Tenders in Bangladesh and Ethiopia that stalled in past several weeks seem to start moving forward. In Bangladesh, the High Court vacated the stay order and directed that the tender announced on September 16 is opened. It cancelled the Ministry of Agriculture prior approval, allowing bulk trade and its affiliate to import 2 vessels from China under the first tender. Other importers instructed by the ministry to open LCs from different countries at specified rates are still permitted to import. Since this ruling, no further action has been taken by the ministry so far. Perhaps we will have more news on that this week. Ethiopian AABC received revised DAP offers for 4 lots in its September tender. For now, it is unclear if AABC moves with this tender or will scrap and announce a new one. But in any case, there will be one, market thinks. Egyptian NCIC issued rewards for its latest sales tender. DAP was sold at $790 FOB, TSP at $585, SSP at $170. All prices mark quite a significant drop to previous business. European demand was slow again, as the affordability issue significantly limits buyers' appetites. Prices inched down amid general softness in the market. Both Moroccan and Tunisian producers decreased their FOB offers by $10 at least from the last concluded level. Current range is evaluated at $790 to $95 FOB Morocco for both DAP and MAP. In the US, the trades for both MAP and DAP were thin, and prices moved down by another $10 to $20 at least. In Brazil, the demand for MAP is almost non-existent due to low affordability. Nominal price level remained unchanged, around $720 CFR, but no interest at this level from market participants. Moving to the fundamentals. European natural gas futures have dropped below 32 euros per megawatt hour as strong storage injections ease winter concerns. EU inventories stand at more than 82% capacity. Lower LNG demand in Asia due to milder cooling needs has freed up supplies for Europe, supporting the price drop. However, NATO-Russia tensions continue to pose a risk of supply disruptions. Markets are also monitoring potential sanctions on Russian energy, with Europe banning seaborne imports by 2027. US natural gas futures increased by 6% over a week to $3.3 per MMBTU due to slower storage buildup. Energy Information Administration data showed a smaller than expected storage build of 53 billion cubic feet for the week ending September 26, well below forecasts and the 5-year average of 85 billion. Meanwhile, output eased in September from August highs. On the export front, US LNG shipments hit a record of 9.4 million tons in September, though early October feed gas flows have dipped due to reduced intake at Venture Global's plant in Louisiana. Agricultural commodities future prices moved differently. Wheat futures continued decreasing and reached $5.15 per bushel on Friday. Bearish sentiment dominated US markets, driven by favorable planting conditions, adequate world supplies, and robust domestic stocks. Total wheat stocks are now at their highest level since 2020, reaching 57.7 million tons, a 6% increase over last year, according to the September grain stocks report. These ample stocks contribute directly to a significantly looser domestic balance sheet. Meanwhile, Ukraine will increase winter wheat planting area by 9% due to decrease in corn and sunflower planting areas that were significantly damaged by drought this year. Corn futures also dropped to the level below $4.2 per bushel, as prices were pressured by favorable weather and the ongoing harvest. But from the other hand, buoyed by optimism about increased corn use in ethanol. Prices were underpinned in overnight trading after California passed a law allowing sales of E15 blends, meaning 15% allowance of ethanol in gasoline. That's expected to increase the amount of corn used for ethanol blends. Meanwhile, 18% of US corn was harvested, and Argentinian plantings are moving quickly at 20%, up from 12% a week ago. So, global supply is expected to be ample indeed. Soybean futures climbed to $10.18 per bushel as markets weighed the prospects of renewed Chinese demand, after President Trump said soybeans would be a key topic in his upcoming meeting with President Xi Jinping in 4 weeks. The remarks spurred some buying, though ample supply and China's continued absence from the US market may limit gains. Meanwhile, Treasury Secretary Scott Bessent said that with China still refusing to purchase US autumn soybeans, costing American farmers billions in lost sales, the federal government will unveil targeted aid measures next Tuesday. He added that recent trade agreements include agricultural purchase commitments and that Washington will encourage alternative markets to help offset the gap left by China. The administration also plans to work with the Farm Credit Bureau to ensure farmers maintain access to financing and production support. Moving to the shipping industry. The Drewry World Container Index fell 5% last week, marking the 16th consecutive weekly decline. Spot rates from Shanghai to Los Angeles decreased 5%, while those from Shanghai to New York by 2%. Asia-Europe spot rates also dropped by 7 to 9%, depending on the route. This happened mostly due to Chinese holidays that usually negatively influence global container shipment activity. The experts expect the supply-demand balance to weaken in the next few quarters, which will cause spot rates to contract. The Baltic Exchange Dry Index collapsed by 300 points last week, also due to Chinese holidays mainly. The Capesize market showed sharp deterioration in sentiment, pressured by unconfirmed reports that China's state-run buyer CMRG had suspended BHP iron ore purchases. For the Panamax segment, it was also compelling with limited demand across the globe. In Ultra-Supermax segment, the Atlantic started the week on a relatively firm base, although as the week progressed, it became apparent that the positive momentum was positional. In the continent and Mediterranean, the demand was quite strong, and the rates as well. Same in handysize segment, where market remained steady and positive throughout the week. To sum up, fresh Indian urea purchase tenders spurred activity in nitrogen segment and supported price trend. However, not that much. Many producers across the globe are long amid subdued demand in other markets apart from India, and Chinese participation in this tender is probable. On top of that, the shipment window for this tender is until December 10, so likely this is the final tender for this year. All in all, bearish trend is already in the air. Ammonium sulfate price inched a bit higher due to increased purchasing inquiries from Brazil and despite Chinese holiday season. Ammonia price showed more upward correction both sides of Suez amid tightening supply. However, spot activity was subdued. Phosphate price dropped more because of limited demand on the back of extremely low affordability across the globe. Natural gas price in Europe decreased due to a healthy level of storage injections, while in the US, price went up due to production drop. Future prices for wheat and corn continued decreasing amid favorable planting conditions, while soybeans price increased due to positive signs of potential negotiations regarding US supply to China. Container shipping rates dropped further due to Chinese Golden Week's festivities, and bulk shipping activities slowed down as well because of that. So, let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.